Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 9th of August. All right, now, big non-farm payrolls numbers on a Friday have the US dollar sort of cruising to the top side. Now, it hasn't been easy going, but I tell you what, it's the start of, it gets the Fed talking again. We're talking about, potential tapering of their asset purchases. And that'll be, once that starts, then we start to talk about raising interest rates. But obviously that's way off, but that's the cycle or the psyche that the traders get into. Now, the non-farm payrolls, 943, I think 875 was the forecast around there. Unemployment rate, better. Average earnings, better. It was just better across the board. Now, I understand them, and these sort of numbers here, right? You're looking at that and you're like, wow, that's probably like a 150-point move. Now, we haven't seen that, and the market's probably just a little bit gun shy from all the potential moves and spikes and this and that and the other. So it takes time for the data to sort of settle into, like, clean out the market, current positions. There's a bit of repositioning. Don't forget it was on Friday, so you'll probably start to see positions starting to go on now. And we are starting to see the dollar just fractionally favor the top side still. Now, I'm thinking if you're a dollar trader, you're looking to buy on a dip at this stage or on a break of resistance. So, and there's not much to do on the technical front. If you did your charts on Friday, well, there's no reason to go and start redrawing your trend lines because the current ones are still relevant. You can see here where the dollar index broke higher. We've got a trend line up above 93 on the dollar index itself. Dollar CAD, well, it's broken higher above here. Dollar yen's got, dollar Swiss, a little bit of resistance higher. So you're looking for retracements back towards some of these levels. Like euro, I'm looking for back towards 117.80 would be a nice level to look to get short, right? There's no need, I don't think at this point, to jump straight in. Sterling broken down once again, looking to get back on a retracement to go with that initial dollar move. Aussie, it got belted as well, as did the Kiwi, right? So what we've got is, when you look at the dollar across the board, this makes you very confident that the market is seeing things the same way, uniformly. I mean, dollar CAD hasn't gone up a lot, but it is moving topside. So the dollar is rallying, okay, against everything. So euro, sterling, Aussie, Kiwi drifting to the downside. Where do you get in? Well, look for retracements and then start to piece together where's momentum going to come from for this week, right? And when you come back down and have a look at the numbers, this second week, it looks to me, it's pretty attractive, because if you just scroll down here, now the Chinese numbers haven't really come into play. Once again, really focusing on the central banks or the currencies that have, meaning at the moment. The Fed, they're talking about doing things. Bank of Canada and RBNZ are the three sort of really active central banks. And when I say really active, it's not like they're doing things every day, but they are giving us forward guidance on what they're going to do if certain things happen. That connects the data to the market, and traders will feel confident trading those instruments because the numbers mean something to what happens with the central bank. So that aside, now let's just have a look what's going on. So coming into today's trading, there's some Chinese numbers. You know what? Go back a year or two before the pandemic, that were very highly connected to the Aussie and Kiwi. Now that connection, it's sort of still there, but it's not as active as it was. So I'm not getting sort of overly excited. I won't be sort of holding my breath on that. Electronic credit card, deep retail sales. Well, in New Zealand, there's not a big retail sales number, so that could give us some sort of insight into what's going on there. But that's you're looking at that for Tuesday. The real action that you need to be focusing on and circle is Wednesday, right? Wednesday trading, we've got the US CPI numbers. Now, once again, this cycle comes into play every month, right? We got the non-farm payrolls. The following week, we have the US CPI numbers. And that, if you get a connection with those two things, which they are highly connected, I mean, if there's more people employed, there's more people getting paid, there's more spending, right? Inflation should go up, right? So we just want to see if there's that clear connection. And if there is, well, then it goes some way to continuing that move on the dollar, right? And I was just going to change screens. And also you come back to start looking at reports, say either on Metastock or Bloomberg. US jobs report bolster the case for Fed to taper asset purchases. If the CPI numbers are strong, and I'm talking really strong, the well above 4% year on year, well, then you know what? It's going to put pressure on the Fed again. And that's where we start to see that continuous dollar move. We're looking for some sort of, medium to long-term, ideally, trend. What we've been getting is really short-term, where the US CPI and the employment numbers haven't been matching up. Hopefully this one does, and it gives us some sort of opportunities here to get something happening. Now, just looking at with all that happening, right? So we've got a bit of a dollar bias, which is great. And you can see here, there's a clear sort of risk-off situation. Euro, sterling, Aussie, Kiwi moving to the downside, the dollar rallying, right? That's nice. This is nice trading conditions. I know it's Monday and everyone's sort of got the jitters, just with Monday liquidity. But as we go through the Asian into the European, then in the North American session, I would expect this move to continue. Okay. We should start to see, say, something doing the same with the equity markets. If anything, you'd think equity markets would get hit, right? Stronger employment numbers. It's that step closer to the Fed tapering their asset purchases and, say, potentially raising interest rates, higher interest rates, lower equities, right? So you want to look for that connection. So if the US CPI numbers are strong, equities should get whacked. The dollar should rally, and the dollar block, Euro, sterling, Aussie, Kiwi, should fall lower. We'll see what impact that has on the treasury market. And then you can come down and start piecing things together with the commodities and a few other things. At the moment, gold, silver, copper, everything's a little bit lower on that front just at the moment. And the safe havens, well, there's not a lot of uniformity just at the moment, but we'll see how that connects. So this is your week. This is the start of your week. Get your charts done. We've got dollar strength in the market. Look for levels to get into the market. Circle Wednesday on your calendar, on your desk. If you can, if you're working, try and maybe just squeeze 10 or 15 minutes of your day out to see what happens with those numbers. And if we've got good technical levels, which we sort of do at the moment, then we may have some clear trading opportunities, and that's where the cash will come from. All right, guys, all the best. We'll be in touch. Have a good week. Cheerio.